Hello and welcome. This is Roy. I'm sharing with you a short clip taken from a long video, over 60 minutes video that I just recorded for my subscribers. The clip focuses on AIG. It's a company that is very important in the financial sector, and also on Muni Bond Fund that you will see managed in California. Both these stocks are looking into dark future as far as I'm concerned, and not just those stocks. There are several sectors in the market that are beginning to crumble pretty fast. I think it is misleading just to focus, for example, on the Dow Jones Industrial Average and say, hey, it looks pretty solid, there's nothing to worry about. I think you have to look around a bit. I'm looking at enormous amount of markets from all across the world, and just to give you an example, the FTSE in the UK gave back, in just the last 2 trading days of this past week, it gave back profits that it took it 5 weeks to accumulate. Just in 2 days, it wiped out 5 weeks performance. So just to give you an idea, there are some markets that are beginning to break down pretty fast, and I think the situation is not looking good for the bulls. Anybody who stays on the long side is taking immense risk. In my opinion, it's simply not worth the risk. Stand aside. If you're so keen, stand aside, keep your money safe. There'll be, in my opinion, a few months down the road, there'll be fantastic opportunities. Why push your luck? That's the way I view it. Wishing you a great week. If you like to have further information about my services, my website, please stay on after the clip ends. I'll speak to you again. Bye now. Hello and welcome. This is Roy. Here are some observations that I think are likely to unfold in the next several days. I think the dollar is likely to continue to weaken against most currencies, maybe flex some muscles as it has done in the last several days against the South African rand and the Australian dollar, currencies that are associated with the precious metals, as the precious metals themselves will come under quite a bit of pressure, and I see them continuing down. Oil may find a trading range only if it breaks specific levels, which I'll show you in the video. Will I think that it is entering a bear market? The bonds across the board, I think, will continue to be weak and look lower. We had a pretty important reversal this week in the Dow Transportation Average, the most notable of all the indices, and I expect stock markets, most of the stock markets that we follow, to continue to weaken and possibly begin serious drops. I'll discuss 2 key stocks traded in the US. One is AIG. Most of you probably familiar with it, and another one is a Muni Bond ETF. Okay, let's begin here with the charts. Here are the charts that I've got. I've got US dollar index, the US dollar, Danish krona, Australian dollar, US dollar, high grade copper, gold, silver, heating oil, gasoline, Euro bond, USD bond, TNX, TYX, and then I have a look at SPX, Dow Transportation Average, the BKX, the FTSE of the UK, the DAX, Italy's MIB, and as I said, the AIG, and PCK, that's a Muni Bond ETF. Business here. This is really serious, in fact deadly if you ask me, and I don't know how many of you are aware or are intimately aware of the activities of AIG. AIG is an extremely important company that insures, that is playing as an insurance to multiple kinds of contracts, future contracts, interest rate contracts, swaps, whatever. It's a fairly complex business there, and had a catastrophic role in the collapse of 2008. Almost brought the financial system to its knees. Not almost, actually brought the financial system to its knees. Just that you see the wipeout that we had here. and it went. It was whatever you want to call it, bankrupt. It's just a facade that it is still active because it receives support from right and left from the authorities, because it is a crucial company that has to continue to operate in order for quite a lot of other things not to collapse completely, and that's going to be even worse. So here you are. That's what's going on here, and I think that what I am reading here in the pattern is very bearish, and I am afraid that it is signaling a possible return to the lows of 2008 and maybe going even lower, and that is very, very bad for the financial sector and for the financial system as a whole. That's why I said I think it's deadly. That's the monthly, just to give you a perspective of this mayhem, what we had here, an absolute end of the world. It's a scene of end of the world, what you see here, and it really felt like that in 2008. And unfortunately, it was the end of the world for quite a few people who couldn't cope with the stress of this. That's when you take money too seriously. This is the daily now, going back to July. That's the bottom right here. No, I'm not. No, I have to take you to the. That's the bottom. It's very difficult because the chart keeps changing the proportion. The bottom is right here. That's the level, and I'm unable to show you the. Okay, we had a run of 5 legs that I'm taking as an A. Okay, that's an A, that's a B, and we had a run up here that I'm taking as a C. Do you see that? So we had a first leg ABC. We had another ABC coming down, that's an X. 1, 2, 3, 4, 5, that's an A. That's a B. That's a 1, 2, 3, 4, 5, that's a C. I think we are now done with 2 ABCs separated by an X. There are several things you want to watch here. That's the line, support line. It's bang on the line. There is a 200 moving average going up, and there is the 50 moving average. It's already gapped down under the 50 moving average. The pattern in itself is nothing to cheer about for the bulls. In fact, although we have very serious support here at 40, we have multiple confluence of support area here at zone at around 40 and 35. Now let's be clear. 30, it breaks 35, 30 for 34. This one is going to go straight to 20, and the retest of the flow of 2008 will not look like a fantasy. It would look like something that is fast coming. And just look at the start. And I think that you should go. I am very, very serious about this. I think you should really go and and examine this chart. Take your time. Study this chart, because this is such an important company in the its place in the financial system is so immensely important that you really don't want to miss what it's doing. And look at that. Does that look to you like a market that I would say has a reasonable confidence of its continuous performance in an adequate manner, or it looks to you like a market that is in complete panic and may actually signal an absolute panic signal for the rest of the markets? And that's what I think it is. I think that is exactly the case. I don't think I exaggerate. Just look what happened here. In less than just a few days, it dropped from 63 to 42. What else can I say? Here you are, and that doesn't look to me like it's complete. No way at all. That looks to me like there is several legs coming, and of course this is a fantastic candidate for selling short, or see what you can do, either buy puts, whatever. If you don't get involved, just follow it, and as I said, that should give us a very important signal about the health of the rest of the market. That's the weekly scale of PCK. That's a PIMCO California Muni Income ETF, and that's the weekly scale going back here to 2005, and I think the chart speaks for itself. You can see what happened. That's 2008. We had a 1-2 slump, wipeout. It was 17 at the high, went down to touch almost 4, and since then, fantastic rally, double in price, more than double in price, and then we are back We are back to the downtrend. This line pushed it down. There is no question. It pushed it down. And I think we have a nice structure of a 1, 2, 3, 4 calling for the fifth. This structure says it's going down under 4. It's going down under 4, under the 2008 low. This is important. I think right now it is a 1, 2, 3, 4. Looks to me like a good 4. That looks like a triangle. Breaking 8. We're going down. Probably there'll be a struggle at around 7. 1, 7 gives way. Boom. Down to 4. Again, another chart you may want to study further. The symbol, I've got it here, PCK. That's what I would say at this point. Like some further information about my website, my services, all you have to do is click on home at the page which you are right now. That takes you to the home page of my website. I have a page on Twitter. You are welcome to join. I don't make intensive use of it, but from time to time I do make some comments. I've got 3 articles here that I've written. You may like to take a look. His testimonial submitted by an active trader that is using my service. There are more testimonials right here. I have an affiliate program. You are most welcome to join. You don't have to be a subscriber. Links to my videos speaks for itself, but I do have a new YouTube channel that actually covers the recent videos. I haven't had a chance to actually update that, and it also includes a video explaining about a weekend product. So if you are searching for that new YouTube channel, please type EW Practitioner, EW Practitioner in one word when you go on YouTube, and that takes you to the channel and you will see all the videos. RN Elliott, that's a section where you can download a full-scale book. I suggest you do that if you're interested seriously in learning about the wave principle. That is an excellent first step. Private policy, terms of use, these are standard categories. Why join? Read that to see in which ways I think I can help traders at different levels. Subscribe here. That's where you take practical steps to subscribe to my service. I have 3 ways in which you can use my service. You can either take an introductory offer, which is just 1 week. It is a one-off, meaning you can't use it repeatedly. You can use it one time. It's only $9.99. It gives you access for 7 videos. Today's video, plus the chart, plus every single video that I'll record in the coming week, and the charts. And after 1 week, you make up your mind. You want to continue. You use the other any of the other options. The second option is a weekend product where I allow you to access the weekend videos plus the charts, and that is priced substantially below the normal product, which is really directed at very intensive traders, people who can watch the market every day and can make use, can actually digest all that information that is being churned by the market every single day. And the third product is the full product that costs €79 only per month. That gives you access to a lot of information, a lot of setups that I run through every single day, and basically keeps you really in fully informed about the many various markets that I cover. I'm also open to some suggestions. If you come on board on the full product or any other products, please feel free to ask me if there is a specific market that you'd like me to cover. I can't promise that I'll cover it every day. I'll do my best to cover it from time to time, or at least have a good look at it. That's contact us if you have any problem whatsoever. Get in touch with me. I'm here to help. Tell a friend. Spread the word. By all means, I would appreciate a helping hand. Downloads. That way you can download charts that I put on in the public area. You can see the kind of work that I do. Recommended reading list. Go ahead. They are fairly it's not as extensive as I would have wished to put here. I just don't have enough time to update it. I have many more books that I would like to put. I need more time to go through that, but there are quite a lot of books here, and also some links to download full-scale books. So go ahead and take a look. Frequently asked questions. That's where you really have to come back to this. If you decided to subscribe, that will help you to find where to find past videos, past charts, etc. Useful links, speaks for itself, and that's about it. So I hope to hear from you, hope to see you on my website, exploring a bit what's going on, and get in touch with me. The slightest question you have, whatever crosses your mind, I'll be glad to help. Wishing you successful trading. Have a great week. Bye now.